Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome and thank you for joining us again at the Bismillah Podcast by Adl Advisory. As we've always tried to explore different regions, their growth and also development and challenges with respect to Islamic finance development. Today, we are going to be exploring new area, and that is going to be Central Asia. Today, we are going to be trying to navigate the gray area, trying to discuss moving from interest to integrity, the reality of Central Asia. Tajikistan has been considered as the first mover as far as Islamic finance law is concerned, which was established in 2014, followed by the biggest country with the largest Muslim population, and that is Uzbekistan, with Muslim population amounting to 37 million and yet considered as a sleeping giant. None other than Associate Professor Dr. Ashurov Sharofiddin, the head of MSc Programme, IIUM Institute of Islamic Banking and Finance, International Islamic University Malaysia. Dr. Ashurov happens to be not just an academician, but also an expert who sits on several Shariah boards in Islamic banks, Takaful, here in Malaysia, and also in Central Asia. Thank you very much, Doctor. Let's try to explore the landscape of Islamic banking and finance, its adoption in Central Asia. And let's look at both the first mover and the sleeping giant. Understanding the fact that you are originally from Tajikistan and you understand largely the operation of Islamic banking and finance in the region. For example, the reality of the fact that Tajikistan are the first country to establish the Islamic law, and we also have Uzbekistan, which is coming very a bit slow, considered to be slow, even looking at the entire population of Muslims, which perhaps may suggest the need for Islamic finance and product and services. I want you to give us the state of the union. What is the current reality of Islamic banking adoption in looking at, for example, the reality in Dushanbe versus what we have currently in Tashkent?
Okay, Bismillahirrahmanirrahim. Thank you very much again, Brother Abdulakeem, for having this session. In fact, when you talk about the Central Asia is one of the, as you mentioned clearly, that is one of the newcomer to the Islamic banking and finance. So before I go to answer your question, I think let me to go in more broader aspect of the Central Asia. Central Asia comprising Tajikistan, Uzbekistan, Kazakhstan, Kyrgyzstan, and Turkmenistan, shares a common economic and legal as well as historical background shaped by the Soviet legacy. Economically, the whole region is dominated by agriculture, commodities, small and medium-sized enterprises or SMEs, and labor migration as well. And SMEs account for more than 60% of employment across the region. Yet, access to formal finance basically remains limited, particularly for rural and phase-sensitive kind of populations. So, but from legal perspective, all Central Asian countries operate under secular legal system with a strong state oversight of the financial sector, while religious freedom is constitutionally protected, and regulators tend to be cautious toward explicitly religious financial products. However, because of the demand rising in the region, so basically this has shaped the gradual and pragmatic adoption of Islamic finance, and often framed as an ethical and alternative financial model rather than a religious product. So come to the question. Tajikistan was the first country, as you mentioned, in Central Asia to adopt and introduce dedicated Islamic banking law in 2014, positioning itself as a legal pioneer. However, in practice, Islamic finance assets still represent less than 5% and of the total banking sector in the country. So maybe the question be raised that how about the Kazakhstan? In reality, Kazakhstan started quite early, since 2009. But when it comes to the practice, yes, Kazakhstan started earlier, since 2009, but when it comes to the dedicated Islamic banking law issued by the government, basically Tajikistan is the first in the region. However, when it comes to the Uzbekistan, it represents a different path with a population exceeding 36 million, which is actually considered as the largest in Central Asia. So, and the country entered later to the Islamic banking finance, newcomer basically, but with a stronger market momentum. Since 2020, basically Uzbekistan has introduced Islamic windows and Islamic microfinance initiatives, and also cooperation with IISDB. So this reflects a regional pattern. Early movers focus on legal form, while late entrants focus on market demand and gradual experience. So overall, across Central Asia, this contrast is basically and highlights a key lessons, which is basically sustainable Islamic finance development requires alignment between law, market demand, and institutional capacity.
Thank you very much. I think I want to quickly touch on some of those things that you raised, and which is going to largely guide the whole conversation. First, you mentioned the fact that the CIS countries, you mentioned the 5, Tajikistan, Kazakhstan, Uzbekistan, and Turkmenistan, and also Kyrgyzstan.
Yeah.
And they have the same common bounding, which is the Soviet legacy.
Exactly.
Now, when we look at the reality on ground, as far as Islamic banking adoption is concerned, do you see perhaps why there's a slow adoption or the slow presence of Islamic finance services, products, and investments? Could it be part of the past, maybe put it as the legacy of the reality of the Soviets put into the reality that maybe there's research that says that suggests deficit in trust? Could you think that maybe trust is part of what is currently slowing the pace? Perhaps maybe people cannot understand the difference between the conventional loan and murabaha, for example. Could it be trust issue, or could it be the reality of the past vis-a-vis the Soviet legacy?
Yeah, thank you, Abdulakeem. It's very important question. In fact, this is reality what you mentioned exactly. But if in very short answer, I can summarize it basically: lack of trust, financial issue, the financial literacy issues, and also the Soviet legacy. But if we go to the details, we find out that yes, basically trust remains a central issue across Central Asia. Decades of centrally planned finance basically created a culture where banking was seen as a state-controlled utility rather than a trust-based service. And today, resistance to Islamic finance is less about religion and more about limited financial literacy. And then a part of that, immediate after the collapse of former Soviet Union in early 90s, there was also the whole banking system actually collapsed. And the whole Soviet Union region at that time was consist of 15 countries. And more specifically, the Central Asia were hit by the very severe financial crisis and banking collapse, which is the whole population in the region basically lost actually billions of dollars. So that actually that kind of the distrust still is continuing. And when we come to the Islamic banking finance institutions, for example, IISDB and World Bank studies suggest that financial literacy levels in parts of the Central Asia remains below 40%, which is actually quite high. And many consumers do not clearly understand how Islamic contracts, for example, such as murabaha you mentioned, differ from conventional loans. So basically the financial literacy, not only from the conventional perspective, but also from Islamic perspective as well, such as because it's kind of the new phenomena to the region. So they don't know the basic understanding of murabaha contract, for example, from the conventional one. So in countries where regulators require clear disclosure and standardized contracts and acceptance improves. So regulators themselves are cautious from the regulator side, primarily due to governance and consumer protection and reputational risk concerns, right? So practical experience, for example, when you look at from the different part of the world, such as Malaysia, demonstrate that or can help how to overcome those issues.
Thank you very much. I think you highlighted two major things. First, you mentioned about the awareness, public sensitization, education, literacy around the new prospects of Islamic banking and finance, and what also they mean and what they stand for, what differentiate them from the conventional products that they've been used to for several years. And that is one aspect you mentioned. Secondly, you talk about regulatory. I'm going to maybe sledge and hammer on that part of regulatory and operational reality. When we look at first the fact that, for example, in Tajikistan, 𝐁𝐸𝐲 Bank happens to be a full-fledged Islamic bank, right?
Yeah.
And when we look at in Uzbekistan, for example, still operates more of microfinance bank, windows,
Yes.
and that is the reality.
Yes.
So putting both side by side, do you think perhaps maybe the issue right now is about maybe regulatory guidelines, framework, and also that is developed in such a way that help to really bring the trust?
Yeah.
Because before there's going to be more of education at the downline, that is the grassroots, the beneficiary of Islamic banking product. At the regulatory level, there's need for us to have a well-structured framework that really direct and guide, just like we have in the conventional. So how ready is this region, the CIS? How ready are they to adopt the likes of the big sophisticated products in Islamic banking and finance like Sukuk, that is able to really advance a lot of developments, investments? How ready is the region, understanding the fact that we only have 𝐁𝐸𝐲 and we in Tajikistan, and we have just windows and microfinance in Uzbekistan?
Yeah, very good question. In fact, but when you look at the across Central Asia, Islamic finance regulation remains fragmented, and but I look at from two different perspectives. First, from the micro perspective, from if you can say from the demand side, there's a demand. So because we are talking about in the whole region is of almost more than 50 million of population, Muslim population in the region. So yeah, it's year by year actually the demand increasing, and Islamic kind of the awareness also increasing, and the demand there. From the micro perspective, you look at that, yeah, there's a demand, and demand is increasing. And but from the when you come to the regulator side, we see that the regulators still they're cautious. They want to have more robust framework. But let's come to the particular case. Tajikistan has one full-fledged Islamic bank, which is 𝐁𝐸𝐲 Bank, while Uzbekistan, Kazakhstan, and Kyrgyzstan and really rely more mainly and largely on Islamic windows and microfinance. So none of the countries currently operate a fully functional Islamic interbank money market, for example, which is one of the the backbone of the Islamic bank and finance. So therefore, this regional gap limits the introduction or introducing the and advancing instruments or Islamic banking finance instruments such as, for example, Sukuk and other what we call the liquidity products management. And for example, the sovereign Sukuk issuance requires coordinated tax, insolvency, and public debt frameworks, right, and so on and so forth. So as of 2024, for example, no any Central Asian country has issued a sovereign Sukuk, despite repeated policy discussions, engagement with ISDB and other financial institutions, FSB as well. So a regional approach potentially through harmonized standards or cross-border pilot projects perhaps would significantly improve regulatory readiness and reduce duplication of effort. So because already in the region, the whole country is actually collaborating among themselves in different way in conventional and in conventional banking and finance industry. So it could be have the same way of collaboration or harmonized framework among the whole region.
Thank you. You touched on trying to help us see the reality of the fact that at the corporate level, at the sovereign or the country level, Sukuk adoption or readiness is still fragmented. Understanding the fact that at the moment the financial framework for Islamic banking is still not in the shape that it can give the confidence to say maybe foreign investors and the like. So given the background that you've given of the reality, I'm taking that as the high level corporate advancement in Islamic products, the sophisticated product like Sukuk. Now bringing it a bit lower down to the grassroots, where you mentioned earlier that the Central Asia is characterized by small businesses, agriculture, and also personal trades and the likes. How do you think that Islamic finance products, Islamic banking products, can reach the likes of those small, medium businesses, the agriculture, the farmers, the small single traders? How are they able to adopt Islamic finance to really give them that alternative as far as that is concerned in regards to Islamic banking and finance?
Yeah, thank you very much. In fact, when you talk about Islamic banking and finance, one of the unique criteria actually normally collaborate or in finance only the real economy, right? So basically you talk about the real economy. So that's why when the real economic strength of Central Asia basically lies in SMEs, as we mentioned, and also agriculture and cross-border trade. So these are three main four main areas of collaboration. So SME, for example, contributed over 60% of employment, but face chronic financing gaps. Islamic finance has the potential to address this through asset-backed and risk-sharing products. In practice, most Islamic financing in the region remains concentrated in short-term murabaha, for example. And however, Islamic microfinance initiatives, particularly in Uzbekistan, have shown higher repayment discipline and stronger social acceptance. So these examples demonstrate that simplicity and relevance matter more than product sophistication. For Islamic finance to support regional development, product design must prioritize affordability, right? And also seasonal cash flows, as well as partnership-based structures, which is suitable for agriculture and small trade.
Thank you very much. I mean, just looking at the reality of the fact that currently the Islamic banking and finance adoption in CIS right now still stands a bit very unstable in terms of the thumbprints of its existence across the five the countries that you've mentioned. And again, looking at the fact that we still do not have a standardized framework, it's still very fragmented, as mentioned by yourself. And again, also looking at the literacy at the demand and also the supply side, and again finally looking at the readiness in terms of the sophisticated products and even products for the one-on-one or daily, the real economy, as it were. How do you think we can move from this reality of the CIS countries, the Central Asia countries? How do we think we can move? How do we think we can model to bring about the real advancement that we want, especially looking at the fact that you are also a product of maybe several Islamic finance exposure, especially in Malaysia, where you add your education and also sitting on Shariah board in one of the Islamic international banks here in Malaysia. How do you think we can model and bring about a fast-paced development in the CIS countries?
Yeah, thank you very much, brother Abdulakeem. When you talk about the Islamic banking and finance, when you compare it with the convention, of course, it's very new. Just Islamic and finance become 50 years old by this year, right? So that's why actually the newcomer region like Central Asia need to learn or take the lessons from the more advanced countries like Malaysia, for example, or Middle East or other countries. As far as Malaysia concerns, because I'm working as an academician, as a practitioner here in Malaysia, so I think Malaysia can be a good example and can be transferred the Malaysian experience to Central Asia region. So basically, when we talk about Malaysia offers a valuable reference point, not as a model to copy wholesale, right? So we have to be clear on that. It's not copy-paste model, but as a system to adopt, right? Its success is built on three main pillars to my humble understanding: strong and independent regulation, and sustained talent development, and product diversity, serving both retail and corporate sectors, which is Malaysia advanced in that. So therefore, for Central Asia, the most transferable lesson is basically governance clarity and clear Shariah oversight, regulatory coordination, as well as legal certainty. So at the same time, Malaysia's experience also basically passed through very different level of the advancement. So that's why when you talk about the copy-paste model, so basically it's not workable. So that's why we need to see which part actually, and especially the legal and the framework part that can be copied and can be modified and make it suitable for the whole Central Asia. But of course, to me, Malaysia is a good example, can take the lesson because Malaysia playing as a hub of the Islamic banking and finance in the world.
Malaysia serves as the hub of Islamic banking and finance practice in the world, and you suggest that the model is one that is good, that can be modified according to your word, not copy-paste, but modified based on the reality of the Central Asia. In your last word, if you would, what would you suggest based on the reality of the last couple of years going into 2026? Because interestingly, today happens to be the last day in 2025. What do you project for the Islamic banking advancement in the region of Central Asia?
Yeah, you see, the Central Asia to me is actually one of the newcomer, and as you say, is very the term you use it. Maybe I borrow it to use it also, the sleeping giant, because of the as a Muslim majority population in the region. We're talking about almost 50 to 60 million of population in the whole region. If you include Russia, for example, Muslim population in Russia, for example, we're talking about almost 80 to 100 million of Muslim population. So the potential is there, right? So, and then when talk about the, for example, Islamic bank and finance asset value in whole world, globally, we talk about almost $5 trillion, and it's projected to happen or reach to $7 trillion in 2027. So that's a good potential for for Central Asian region to recruit Islamic banking FDIs to the region. So for that, actually, really need to enhance the framework and so on and so forth. So another point I want to emphasize and clarify further is that regarding the Malaysian experience, in fact it's very robust and so far is the best. But Malaysia reached to this point through certain progress and so on and so forth. So we cannot advise, let's say, the new region comer to grab the last, which is actually didn't experience the whole process. So that's why it's not workable. So looking ahead to 2026, basically Uzbekistan is the best positioned to emerge as a regional Islamic finance hub due to its population size, a reform momentum, for example, and openness to international partnership. Other countries are likely to experience steady but incremental growth, and this single most critical reform across the region is actually basically the establishment of Sharia compliant liquidity management mechanism, which is very important and significant. Without this foundation, Islamic banking and finance cannot scale or manage risk efficiently. So if liquidity tools, for example, regulatory coordination and talent development progress together, Islamic finance can evolve from a niche alternative into a meaningful contributor to the Central Asia economic resilience and financial inclusion. I think the regulatory side, the governments in the whole region should understand that Islamic banking and finance is actually good potential to enhance Islamic banking and finance and to create the new job, the new economic growth to the whole region. Is not kind of the competitor to conventional.
Is not a competitor to conventional. Thank you very much. And that has been the conversation today. We've been trying to navigate the gray area, and that is trying to look at the issue of integrity and interest in the Central Asia. And we've tried to explore the entire region, the growth, the current challenges, and the possible prospects that lies ahead, and the need to open up with a very confident framework that allows and also give confidence to international investors. And that is it on the podcast for today. We are very happy that you've been able to listen up until this moment. We look forward to you joining us again. Feel free to share, like, and also comment. And thank you very much. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much.